Hello, welcome back to this week's market update. Today is Monday, June 8th, 2026, and we'll jump right in. Taking a look at last week's market performance, technology stocks pulled back as investors reacted to a stronger labor market and rising expectations for a potential Fed rate hike later on this year, leading to a healthy pause in the market's recent rally. As of Friday, June 5th, the tech-heavy Nasdaq Composite was down about 4.7% on the week, followed by the S&P 500, which was down 2.6%, and the Dow Jones Industrial Average holding up much better, down just about 1/3% last week. Moving into our economic news from the week, labor market data. Labor market data came in stronger than expected for May, with non-farm payrolls increasing by 172,000 during the month, way above expectations. And we also saw some pretty strong upward revisions to March, as well as April's data as well. The unemployment rate held steady at 4.3%. You can see the third month in a row here. And then when we look at sectors, job growth was led by leisure and hospitality, local government, and healthcare, while financial sector employment continued to weaken. Average hourly earnings rose 3.4% year over year, while the labor force participation rate remained relatively unchanged at 61.8%. And though wage growth does remain below the current pace of inflation, the combination of better than expected hiring, a stable unemployment rate, and upward revisions to March and April's data suggest that labor market conditions are on pretty solid footing. Futures markets quickly adjusted following the hot May jobs report, reflecting growing confidence that the economy may not need lower interest rates in the near term. From Thursday to Friday last week, the probability of no rate hikes by year-end fell from roughly 49%, so aka the base case scenario, to just about 30% on Friday. In fact, now the base case of the futures markets is for a single 25 basis point rate hike by year-end, with significant probabilities that we'll get two 25 basis point rate hikes or a 50 basis point rate hike, even some odds of 75 basis points of rate hikes by year-end. Treasury yields moved higher accordingly, with the inflation-sensitive two-year Treasury yield rising about 12 basis points on Friday in reaction to the news. We also got the ISM indexes last week, so taking a quick look at the manufacturing PMI, that improved month over month from April to May, now currently at a pretty bullish 54% for the manufacturing industry. This was due to an improvement in new orders, production, and although employment still remains negative, that did improve pretty significantly month over month there. Similar to the stronger than expected jobs report, May's ISM Manufacturing Index suggests economic activity strengthened during May. The services sector also strengthened in May, with the ISM Services Index rising from 53.6% to 54.5%. This was due to an improvement in business activity. You can see that rose pretty sharply there. New orders. Employment, however, was pretty much flat month over month. We also saw an improvement in inventories. Prices also pretty flat month over month, still quite high on that prices paid index there. Still, May's Services Index reinforced the message from other recent economic data, pointing to continued strength in overall economic activity. Last but not least, Bitcoin briefly fell below $60,000 coin last week for the first time since 2024, as investors continued rotating capital towards AI-related investments in traditional equity markets, as well as notable incoming IPOs like SpaceX. Additional pressure came from institutional selling and continued outflows from spot Bitcoin ETFs, highlighting the challenges that digital assets face amid a very strong equity market and shifting investor preferences. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.